Greetings, this is Jeff Scott, and this is my video for the weekend ending on the 21st of 2018. As you can see, it's Sunday around midnight, so there's no futures out, so we're not going to go look at that site. As always, we'll start with a presentation, which may go a little longer because I'm going to talk about Netflix. I entitled this week, Melt Up Week 3. I apologize for the audio last week. I don't know if it was the new computer, the new Snagit, some kind of conflict. I still can't explain it, nor can I reproduce it. We should be better this week. It was a pretty good video, and I think I called out some good things for those that could get through it. But it was the same as the week before, and question is, will this week be the same? Probably going to be a little different. Disclaimer, this is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent, which means I paid for all my software and no one pays me to say stuff. And trading involves risk. You and your loan are solely responsible for any investment decisions you make. I entitle the education when I do my live programs to be your own guru, and I suggest you find smart people that have good ideas and good track records, learn from them, put them together in your own style, and become your own guru and not rely upon what other people says to do. As you could see, I started with Cancelim from O'Neill, improved by Morales and Katcher, taken to the computer by Ian Woodward in partnership with George Roberts at HGSI. Later, Ron Brown joined him. My buddy from Canada, George Lee, Van Tharp, the money management guy, and someone who I've become very involved with from a trading perspective is John Person, who is an author, software developer, great mentor, lecturer, and has become my mentor for golfing. And it turns out we've become close friends. Highly recommended. And what he really did is he helped me go from building a list of stocks to actually trading them. I own a lot of programs. I purposely hide my desktop. I need TradeStation or Thinkorswim. I also like Genesis, but if you don't trade futures, I understand why you won't have it. HGSI is a great analytical program. EdgeRater helps me accelerate my returns and my review. And then I do a number of seasonality programs. Frankly, if you have EdgeRater, I'll show you how I use it for seasonality, and you probably can avoid some of the other expenses. And then a number of websites. Speaking of websites, as always, here's the highgrowthstock.com website. I'm independent. I point out two things: a free 30-day trial without a credit card, and under investing strategies, you'll see a number of videos by myself and Ron Brown and others. Stock patterns are cyclical. Well, where are we right now? We failed to roll over, and now we're shooting straight up. It clearly feels like a climax run. The bad news is these things always end badly. The good news is they go on a lot longer than one expects them to. More comments about that later. Since we are in a climax run, I started 2 weeks ago by going extremely long, buying stocks, buying calls, selling puts, and a few bull put spreads. This week, with concerns about the government shutdown, I actually took a bunch of profits. Little aside for those that came on the prior boat trip, you'll have a surprise when you come back. I'll just leave it at that. It's been an amazing year, and it's only January 21st. Go figure. If I look at the market on Friday, just looking at some of the key sector holdings, lots of green. Where is it red? Utilities. Utilities have been weak. Other than that, perhaps energy a little bit mixed. Banks strong with rising rates. More of that to follow. If I look at the major markets, let's just go into Thinkorswim. Here are the daily charts that I watch. So ignore everything. Let's just look at the price. You have candlesticks, you have a 1750 and a 2-day moving average, you have OBV and regular volume. What do we see here? We see stocks closed here, E-minis at a closing high, frankly, an all-time high. Great uptrend. You could argue that it's starting to get a little bit more elevated. The rate of ascent is increasing, i.e., that's why I called it potentially going into a climax run. If you look at some of the stocks, they're going straight up. The NASDAQ also closing at an all-time high. Had a doji, which was concerning on Thursday, and broke right above it on Friday. Good volume, but it was also options expiration date, closed at the top of the range. I should stop saying YMs hit the high of the year on Thursday. Did not quite get back there on Friday, but did have a nice positive day on Friday. The Russell 2000, probably the least impressive of all of them, but it too closing right off an all-time high, which it set on Tuesday before it sold off. Now, things that would be counter the market, the VIX actually moved up early in the week and closed right around the 200. It's been the failure to hold that 200 time and time again over the last year or so, and certainly over the last quarter, that has supported the market rise. We'll see if it fails to hold as well. Then you have to ask yourself, has it found a bottom? Doesn't look impressive on the daily, but let me switch to the weekly, and I'll show you what I think there. Without going into all these, weekly closing highs on all, or weekly highs set on all four indexes. Let's just look at the VIX and then the dollar, because right now it's looking for signs of a change. You could see on the week the VIX closed up. It did struggle on the daily to stay above the 200. Obviously, there's some concern in the market about the government shutdown. I'll probably mention it later. If you look back over the last 20 years or so, government shutdowns are a big deal when they occur, but they're not nearly as dramatic on the market as you might think, and they're short-lived. I suspect the Democrats will cave because they fear taking a public onslaught for shutting down the government, and I bet that we'll get this settled by Tuesday at the latest if it doesn't happen on Sunday before the market opens. So be careful for whipsaws next week. The dollar, this is interesting to me. The dollar had a spinning top upside down, a spinning bottom. That could be a reversal signal. The dollar's clearly been weak, falling from 103.82 down to 90.11. That's a pretty big drop for the dollar. That's a 13 point. That's gigantic. And that's since the beginning of December. Is this going to be a reversal? I think we need to watch it, because a dollar reversal will have impact on a lot of things, probably also the U.S. markets. All right, enough of that. Now, those that are new will say, why does he spend so much time on the markets? Because I promise you, if the markets crater, you're not making money to the long side. If the markets go up, you're not making money to the short side. You need to know what the markets are doing before you even worry about an individual stock. And then, as I mentioned, I use Genesis, and I'm only showing you here daily top, weekly middle, monthly on the bottom. The first column is the E-minis, the NQs, then the TFs, the NYSE, and the YM. What am I showing you? I'm showing you, look at the last monthly bar on all of these. How is this similar to everything else? It's not. It's a much more aggressive bar. This is the climax run. We are in a huge run across the market. And as I said, these have a tendency to go on further than one expects, but when they end, it's not pleasant to be long. Now let's look at internals. Interest rates on the 10 and 30-year continue to march higher, certainly the 10-year more impressively than the 30. This is good for banks, but watch for this at some point to cause problems for utilities, home builders, and others that have benefited from a low interest rate environment, including the REITs. AD lines, both price in white, in yellow, and the AD line in white are pegged at all-time highs. So hard to see a market rolling over that continues to set highs on the AD lines. If I look at the NYSE AD line and then look at in the various colors in yellow, the spiders and the light blue, the Qs and the green, the diamonds, the orange, the IWM, everything's trading up on their advanced decliners to new highs. Price and AD line setting new highs. And if you look at the only thing that's down is bonds trading opposite of the markets. Breadth, now this was a surpriser because there were little change in the number of stocks trading above the 20-day and 40-day. However, the new high, new low ratio, which looks at this number of 13-week new highs and new lows, is starting to get to where the market reverses. Every one of these sharp reverses, especially when they occur up at this line, have led to small pullbacks in the market. So if you're looking for a reason to be concerned thus far, that might be one of them. The daily and weekly McClellans, there's not an issue yet of zero line rejects. There's no extremes. At this point, I'm just watching them. The buckets, think of taking the full S&P 1500 and looking on the right how many stocks in green are above the midline of their Bollinger Bands, how many are below. That's a bullish number. And then I look at what percentage of stocks greater than 1, meaning they're above the upper band, and it's holding steady. It's come down a little bit from last week. Very few stocks are trading below the midline of their Bollinger Band. Another sign of a market that's had a long run, and perhaps another sign suggesting a pullback. There was a Hindi in the NYSE on Thursday. Now, what you can't really read here is that early in the week we had about 12% new highs, and those numbers rapidly dropped. There haven't been a lot of new lows, but these would show some of the froth coming off, and that NYSE Hindi is something that we're going to put that as a non-confirmed signal, but another reason to be concerned. Now, I can tell you what I did, partly because of the thing I did on the boat, but also because of that and because this market, I've had a return, and I'll talk about that in a few minutes, that I've never seen this quickly. It's pretty much doubled last January, and last January was over 400,000 profits alone on a $1.8 million account. And as I said, it's almost doubled that. And we're only 21 days. That's not sustainable. That's not realistic. That's not normal. So I took a ton of profits on Thursday and Friday. I actually had an SVXY short position that made some money on Thursday that I covered. I still have a very long portfolio, but I have raised cash in one to pay for something, and the other, the expectation of the market at some point going to pull back. Market tone decidedly bullish. As you can see, we're green throughout. We look at the third set, which is the Woody indicator. If I look at sector strength in the same way, you could see that staples are yellow and utilities are red. Everything else is green. This has really been the healthiest the market has looked in quite some time. Now, one of the things that Ian taught us was to use surrogate indexes to give us a sense of how the market is doing, to find things that are leaders at a given time, to build an index of those leaders and track them. Well, the canaries have been leaders since we started this, probably in 2013, 14. And the canaries are at all-time new highs. And what's most impressive to me is the canaries have a bongo weekly that turned green. So hard for me to be hanging crepes about the death of the market when my canaries are at all-time highs. What about the index of leaders I put together back in June? And this is interesting. It was still an uptrend, never really violated the 50-day in blue except back here in September. And it's broken out to the upside again. And I haven't changed or reshuffled this deck in quite some time. Breakout continues. But what I did want to do is I did want to come up with a new leaders index that has to do with what's working right now. Why? Again, as I mentioned, Ian taught this to be an early warning signal of market disruption. You build this by identifying current leaders. These will be lower left to upper right patterns and no more than 2 stocks per industry group. By definition, these are leaders and many of them are extended. Spoiler alert, price line does not belong there. I'm going to have to fix that. That is supposed to be PLCE. So let me show you how Well, I'm going to fix it later on, but that's supposed to be PLCE. This is not a buying list, but rather a list of the best stocks in the market as we approach a top. And Ian has taught us that this list may give us an early warning before a major market correction occurs. Again, for the next two slides, it doesn't matter that I have a mistake there, but price line should be PLCE, which I think is Children's Place. Outstanding chart on a retailer. This is what you want your index to look like. This is a lower left to upper right. It's clearly extended, bucking about the high jump. Certainly looks a lot better than either the index or the canaries, because these are what was working in June or in 2013. So this is something that I'm going to watch, because I know if this breaks the 50-day moving average in blue decisively, I need to be out of this market. If it goes parabolic, I know I need to be nervous, but I also know that great leaders will run up that 17-day in green, and we'll see how much further this has to go. I just want to go back to this. This is not a buying list. I know that when we used to do the Ian meetings, people in Hawaii would be getting the list from attendees and buying the stocks on the list and making money. No one knows when this market goes up. I am certain that when the stock's going up, if this market continues to go up, these will outperform. Look at some of those. Look at Fanhua. Look at Marriott. Frankly, if you like hotels, look at Hilton and Wyndham. They all have the same pattern. Look at Skechers. I mean, who would have thought? SVB Financial Group. These are Weight Watchers, CBOE, Old Dominion are just great leaders right now, but they may not be at appropriate buy points. This is not about buying, it's about warnings. Know your news and your earnings. This is earnings week, and we'll talk about that in a second. The news is a moderate amount of news, a couple of Fed heads speaking. As I say here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. During my last video, I spent time on Netflix. I'm afraid most of you probably didn't get there because of the sound quality. Market thought. Markets continue to melt higher, but underlying structure suggests some caution might be warranted. Is the dollar bottoming or pausing in its fall? The VIX, does it hold and go up above the 200-day SMA? We had a Hindi and the 13-week new high, new low, suggesting we're overheating. Yet evident strength, AD lines to new highs. Major markets at daily and or weekly highs. Canary and June index remain at all-time highs. There's underlying industry group strength. And the economy shows no signs of recession and remains in a nirvana state with low rates, low inflation, weak dollar, and strong GDP, not only in the U.S. but also worldwide. The rising rates should help U.S. banks, along with some of the regulatory changes, and you might see overstrength in the regional banks. The earnings have just come out on the major banks, and they were somewhat confusing. Especially because there were write-downs in the tax value or tax deduction value on their overseas funds. But even questionable earnings calls seem to be ignored as the banks ended the week strong. As I mentioned, the Senate failed to agree on a funding mechanism despite the fact the House did. But I expect that to be a short-term problem with an emergency bill early in the week, despite the rants and raves. And although we might see some short-term volatility may occur, historically this has not led to major sell-offs. Recessions cause sell-offs. Recessions cause sell-offs. If anything, the tax cuts are going to increase and overheat the economy. I don't see a recession, maybe not to 2019. An EPS season is here in earnest and will drive markets over the next several weeks. It all starts tomorrow, Monday, with Netflix. So, since it reports after the market, you still have a chance to play it. Do we have an edge? So this is from EdgeRater. Netflix Q1 EPS has been a very consistent performer for years. It has been leading the market up with multiple upgrades from Wall Street, with pricing now pushing 245 targets. And if you think about Netflix, why would it have seasonality now? And it's probably related not just in the U.S., but worldwide. All the toys people get that allow them to order a Netflix account or, frankly, an Amazon Prime account. And they get judged more on new subscriber growth than they do on earnings. And a lot of people have been out saying they expect them to beat those numbers. And if you think about it, they've been very healthy with those numbers, despite the fact, frankly, that the economy had been slowing down over the last couple of years. So in EdgeRater, I know that in the last 15 years, it's been up 13 years and down 2. So it's been positive 87% of the time. The average return is 20. So I ran this in EdgeRater, and then I basically have my own spreadsheet where I multiply the average return by the number of positive years times about 100, and I get a number and I rank them by that number. And this week, it's got the strongest seasonality. Now, if you look down here, you see First Solar, 9 out of 11, 15% average. CXO, CAI, I think CAI is in a merger. CXO, 13%, 9 out of 10 times. WES, an average return of 7%, 100% of the time. If I put up the negatives, which I didn't, you will see very few negative seasonality now. So now the question has to be, what do you do with Netflix? So let's say it has a 20% return. This is Magenta Trader. I use Best Choice Software, SeasonalityTrader.com, and Magenta, and they're all showing about the same thing. Netflix, after pulling back, is now in a pretty steep channel. And you could see it's at the upper part of the channel, which is bothersome. You probably best got into it as it pulled into the channel. That said, you have both 5-year and 10-year seasonality plotted on this chart, 5-year in green, 10-year in orange, and then this is the variable scanner. What is the variable scanner telling me? That if you look at a 30-day window, here is tomorrow. Earnings come out tomorrow, and then the market will start to trade the following day, which will be Tuesday. If you look at 30 days starting with Tuesday, it's been up 10 out of 10 years and 24%. Now, what bothers me with this trade is it's already at the top of its range. That said, the range is 8.7% and the average move is 24%. 24% on top of 220 would be another 45, 48 points. Let's say it moves 10% or 20 points. How might you play it? So what I've done is I've taken a look at a number of spreads. I'm sure you can't see it very well. That's the problem with not using my high resolution to record this. But I could do bull call spreads. These are two different bull call spreads. Here's a bull call, here's a bull put. And if you do a spread, if the stock moves up, you make money, but it's capped. If the stock moves down, you lose money, and it's capped. The advantage of a spread is it's cheap to get in, but it's capped as far as your wins and your losses. I don't like doing those, especially around earnings. Here is the P&L of the stock. As the stock price moves to the right or goes up, you make money. As it moves to the left, you lose money. Owning the stock is great, but the acquisition cost is $200 plus per share, so most people can't buy 5,000 shares. I'm going to skip this one for a second. This is buying a call. The advantage of buying a call is you get all the upside after you pay off your premium. The downside is you lose if the stock drops, but your loss is capped. And here is selling a put, which would be perhaps a dangerous strategy because you're capping your gains, but with unlimited loss. So how do I make it look like I'm buying the stock, but to do it inexpensively and protect my downside like I do when I buy a call but become less expensive than the call. So I want it all. I want limited downside, unlimited upside, and a cheap acquisition price. So those who have been to my meeting know what I call the chicken shit synthetic. I decided that's not appropriate for something I broadcast, so I'm now renaming it the Scott synthetic. And with the Scott synthetic, what I'm trying to do is capture the entire upside, capping my downside, and the way I do that is I buy a synthetic stock at the money, which means buying a call and selling a put. The advantage of that is there's not much theta decay risk because I short it and long it at the same time. Now, I have a substantial margin account, but because of the fact that it's not unlimited, I usually like to buy a put underneath because that put prevents me from having a major loss and reduces the impact on my margin account. So here's what's going to happen on tomorrow. If Netflix trades up, then my put at the money will ultimately fall to zero. My put deep in the money, deep out of the money down here, will go to zero. The put up here is more expensive than the put down there, so that will be a net positive. If the market moves up, then I will be in the money as long as I have a big enough move in price from where we are today to get me to the point where I've paid back the premium on my option play. So I will show you what that looks like on my account in a second, but that's how I'm playing it. We'll do my typical top-down review, and let's go to the charts. So how I constructed this in Thinkorswim, I don't want you to think I am, what did I do here? The joys of multiple monitor resolutions and using the bad resolution on these programs. I'm going to do a 3K next week. It'll be longer to download, and then we'll see what you guys think. You'll get a lot better visibility on my charts, but I'm not sure for those of you that don't have 3 or 4K monitors, that'll be very usable. So that was my concern. Oh, come on here. All right. So you're going to see how I constructed that option right now. So I wasn't kidding. That is my P&L from January 1st. If you back that out of this, you'll see I started the year with about 2.5. 830,000 profit on $2.5 million is 33% or so. Like I said, it can't be real. It's real. It's real. But this is not a normal market. I've been trading a long time. You don't make 30% in January typically. I might be good just to sell everything and go on vacation. But let's find my Netflix position. So here's what I've done. I have bought so I paid about $8.28 for my Netflix 220 at the money calls that expire in 2 weeks. And then I sold a put, which I got paid $10.56. So I made $2.28 on this trade before anything happened, because I got to keep. All right. And then I bought a put that was expensive for $6.03. But what that really means is I got $2.28, $6.03. So for about $3.80, I was able to buy this spread. This spread will have, this is the spread, this pattern where I've capped my loss at the difference between the 220 put and the 210 put. So the most I can lose is $10 a share, and I've got 4,000 shares worth, so that's a $40,000 risk. On the other hand, I have a call at 220, and so I've got to get it to 223 or so to break even, 224. Going back to my PowerPoint, that's what happens when I move from here to here, and that one, I capture 100% of the gains from there. Now, I'm currently up a little bit. That's not why I did the trade, for that little return. And I will make a decision Monday whether or not I keep these two, or do I just close the short put and the long put and just ride the call. Now, what's the worst thing that's going to happen to me? Well, the worst thing that's going to happen to me, we'll go back to the PowerPoint, if the stock gets crushed, my call goes to zero, and I lose $10 on that put spread. So I paid $330 in, and I'm risking another $10. So I could lose $13 per share on this trade. That's about a 6% of the 220 stock price. What if it goes up, on the other hand, to 240, which is 10%? At 240, the 210 put goes to zero, the 220 put goes to zero, so I make $4 there. And at 240, my call goes to 20 minus the 828, or minus, whatever I paid for it, the $6, I make $14 on that. So I'm playing it to the upside, and like I said, depends on how I'm feeling, but I may, if we get a nice move on tomorrow during the day, I may just count my chickens and go to town and sell the put spread for a profit, but we shall see. But it's really been an incredible year to start. I almost don't get it. It's been so incredible. So let's take a look at some things now. If I go into TradeStation, and I just want to very quickly look at my charts to see where we are in the market. Those who have been here know I'm looking at about 6 things across about 6 instruments. On the E-minis, we're in a green daily buy, weekly buy, and monthly buy. That's important to me. Blue, green, green. Green means I can buy or hold. Red means I should be selling or holding. Blue means I can do whatever I want. I look at where we are in the Alexander Elder envelope. We're still outside it on the daily and the weekly. That can go on for a while, but ultimately it will come back in the envelope. The fourth thing I look at is whether or not there's red dots above the price bars or green dots below. And the red dots suggest there might be some MACD divergence developing, and again, further support that this is something that is getting extended. I have my high jump here, 98% is extended, and my bongos daily, weekly, and monthly are all green. So the E-minis look extremely strong, but toppy. Big shocker. I look at my YMs, and very quickly, I see the same story. Strong, but topping. I look at my NASDAQ. Strong, but toppy, 99.39. I look at the Russell 2000. Less concerning. It had a new buy signal on Friday. It does have the red dots, green paint bars. It's only at 91%, but that's pretty advanced as well. So the markets look strong, but getting to a point I'm concerned about topping. I can look at the dollar. As I said, I was concerned that the dollar might be hitting a bottom. Notice we haven't had a buy signal come in, and our bongo is still red, but these little green dots showing a MACD convergence on the daily and weekly have popped up. So if we look at the VIX, it had a big run up, and it stalled here, and the weekly bongo actually turned green. I'm not sure it's going higher right now. And then if we look at gold as a surrogate for metals, you can see that gold has been in a big run. It's blue. Doesn't look like it's over for sure, but we all know that gold is very much dependent upon the dollar. Getting tired. Next, I pop down into my designer. I go down to the Woodward and Brown user groups, open them up, look at Major Markets Plus, hit the warehouse view, ranked by T1, which is just price and volume. Make sure my raw combos is ranking them, and I see small and medium stocks outperforming bonds, utilities, gold, dollar, VIX, etc. No shocker. We've already looked at this, but very quickly, you'll notice that we picked up a Hindenburg here on an HGSI as well on Thursday. And you notice that the prices are at new highs, 8 exponential, 17 simple, 50 simple, 200 simple, very bullish pattern. The concern I have here is it's extended, and one of these days it's coming back. This is the S&P 500. And if I just go to this view here, you could see we've talked about this every couple of weeks that we're going to pull back. No one knows when. The more we get extended from that 200 and that 50, the more likely we will come back. I guarantee we're coming back. I just can't tell you the day it's going to happen. It could be Monday. It could be a month from Monday. Dow Jones Industrial, exactly the same. The NASDAQ Composite, the same. And the only one that's a little different is the Russell 2000 iShares, but they actually don't look so bad either. So the major markets are on fire and strong. We know that the dollar has been weak, and is it bottoming here? I think there's some reasons to be concerned that not concerned in a bad way, but that could be happening. The VIX, as I mentioned, popped above its 200-day, but closed down a lot on Friday. We'll see if it bounces, which would be bad for the market. And then, again, gold spiders softened here with the dollar going higher, and the same will be for silver and miners. So that gives me a sense of the market. Now I'm going to look at industry groups. I would like to make a comment, though, about some of my market thoughts right here. I looked at 400 or 500 charts today. A lot more of my charts made it into the extended stock list, and then I trimmed it down to the stocks that are there today, then made it to my buy watch list. The market is extended. The market is a market of individual stocks, and they are extended. So finding stocks that are performing well that are not extended is not easy. So I think what I've looked at this is I'm already in great stocks. Do I want to commit a lot of new cash? I rolled up and out some options so I could take out money and not leave a lot of money at risk. I think my Netflix options were worth $75 or $80 a pop. And I took them out and traded it for a position where it cost me $330 or something an option per strategy. So I put money in the bank. But to me, it's been managing stops, taking profits, and as much managing what I have as I am looking to chase. Now, we have 73 groups to the upside. We have 3 to the downside. Rail freight, they've had some earnings come out that were not stellar. Generic pharma, there's talk about hospitals taking over manufacturing their own generics. Good luck, that's not going to happen for years. But the government cracking down on some pricing issues. And then internet-based services, Remark Holdings and Grubhub, that was it that made the list. That's it. If I look at 5-day down, I'm only capturing 19. But if I look at 2-day up, it's not 3. I mean, 2-day up shows a 73. Now, when I look here, these are like the all-stars of growth. Biotech. talk about luck. I had been sitting in some $45 Juno calls that I bought when Kite got taken out for $180, and they expire in January. So I lost a little bit of money on them. And then on Wednesday or Tuesday night, they published in the New York Times that Celgene's in talks to buy, and all of a sudden my calls that were at a significant loss turned into a big win. That's purely luck. Don't know what price will get taken out at. Probably about 90. I took profits. I still have a small position, but at this point I'm just thanking my lucky stars that wasn't announced on Monday, in which case my options would have expired and I would have lost my shirt on them. Sometimes it's better to be lucky than good. Was there anything here that told us it was going to get bought out? No, not except for the fact that Celgene already owns a pretty big position in them, so I was sort of expecting that to happen. I just didn't know when it would happen. So that's Juno. Accorda, another buyout, apparently Biogen IDAC, talking to them. Amgen used to be a big leader, pulled back here. Do I want to buy the stock here? It's kind of at where it's peaked out in the past. Probably not. It's certainly getting expensive as well. Intercept, this was one of my favorite stocks a couple years ago when it did that $60 to $600 in 3 days, and now it's back to earth trading at $60 again. Someday maybe it's still in a downtrend. It did have a big move on Friday, so that's why it made the list. Agios, another one that Celgene has an investment in. Maybe they think they're the next one to get bought. And then you have the biotech. And what I do, and partly is because I do business with some of these companies, is I pretty much play LABU when I'm to the long side and LABD to the short side. And it looks just like the biotech index. So I'm long LABU, and I like biotech in the long haul. Semiconductor devices, NVIDIA got some earnings upgrades, and this is what I do. I go through the list, and NVIDIA's got 275 target now on Wall Street, cup, handle, breakout. Maybe it's time to be buying NVIDIA again. Intel, not right now. It's pulled back. I like to see it get above the 50 here before I would get interested. AMD did break above the 200. Both Intel and AMD got some concerns about security. Pass on that. Chemet. This is one I am interested in. This was a great growth stock. It does have good earnings coming in. We're going to drop 22 cents and add 70 cents. So that's a 48-cent difference with a 20 multiple. That should be a $10 move. So I'm going to buy a strategy, probably options. Look, the daily bongo went green. And, my stop's going to have to sit probably down here at 1750. So it's going to be a long ways. But I think Chemet has a chance of going back and testing up here. So I like Chemet, and it's on my buy list. On semiconductor, it's already broken out nicely. Go. All right. Specialty pharma, a lot like biotech. I always thought Nectar was a biotech company. It's developing some immuno-oncology, and all you got to do is say that word, and you go from $30 to $72. It's had a big run. If I had to buy or short this, knowing the story, I'd probably be shorting the stock. Beijing, this one looked interesting. Gapped up, big run up here, sideways. It looks like it's moving again. Kahuna Mobile breakout from a squeeze in a weekly bongo. Doesn't make money, so it's a news-driven story. Madrigal, don't know anything about this. I wish I did. I mean, look at the stock. Makes no money, has no earnings, lots of demand, and broke out here. This was a great opportunity. Even after it ran up, it's gone from 26 to 130 in 3 months. I hope some of you own this. I can't believe I missed it. I missed it because it has no volume, 213,000 shares, so I'm not going to ever buy that. I have no idea what their story is, which means it's, well, who knows? It's an early stage company, I suspect. So it's a hepatitis drug. All right, well, all I can say is, wow, what a chart. Too late. Here's one that looks interesting, Radius Health. They've had a drug approved. They've had some good data. It's been in a downtrend, but you look at the weekly where it's breaking above the 50 with lots of pocket pivots. You go back down to the daily. We see volume is taken off, I believe. Now it's here. Pocket pivots. It looks like it wants to go higher. I don't like the earnings. Supernus, this has just been a great stock for some time. And I'll go through until the index pops up. E-commerce discretionary. Overstock, which somehow is considered a Bitcoin play, which was good for a while. Doesn't make much money. Trades a lot. Pull back. Vips holding, kind of gappy, but jumped up, big move, too late, I would be chasing. Netflix, here's the one, it's clearly in an uptrend, it's not at the top of its range, lots of pocket pivots, it'd be much better to buy it down here, and I know some people did because they told me they did. I'm long, I'm happy about it, but I may change my mind by 4 o'clock on Tuesday, or I may go even more long. Now, keep in mind, you could also sell way out of the money puts and just pocket the premium. You can sell closer, you can sell out of the money calls and recognize that you're going to see on the following day volatility crush, and a lot of those things you sold will become a lot cheaper as the volatility comes out of the stock. PetMed, nice move up in here. All right. Semiconductor manufacturers, so one here I have is Applied Material. Let's go quickly. Lam Research, too expensive of a stock, so I'm going to skip that, as is ASML. I don't know anything about SEO. Trades enough shares, great earnings per share growth, gapped up on Friday, on Thursday rather. So again, I'm always going to go look at my FinViz and see what SEO did on Thursday. Strong preliminary Q3. All right. Well, that's a pretty good thing. You're safe. You know, the earnings are out, although that didn't really work so well at AAOI. But this one is with great earnings per share growth, lots of shares traded. I'm going to throw that into my buy list. I don't think I put it in there earlier. TSEM, nice looking chart. Here's the one I own, which is Applied Material. The whole group stubbed their toes here, broke back above the 50, and I still like Applied Materials. iCore, similar pattern, big breakout this week. KLA 10 Core, another expensive one. And then the other one that I'm going to be looking at, which I've lost money in the past on, is UCTT. So semiconductor manufacturers look interesting. So I build a watch list by doing this, as well as looking at some other lists. Infrastructure, an IPO, industry group is strong, Kahuna's, OBV's heading up, new weekly bond goes green, big move on Friday. Oracle, ServiceNow, what a beautiful tight lower left, upper right. Nothing there. And I basically would go through the top 10 now in internet media. You know, Facebook got hammered because they're changing their news feeds, but you know, they just pulled down to the 50, probably at a good buy point. I've already got a position in it, so I'm not buying any more. Google looks strong, running up with the market, as does Google L, and I put one of these in my leaders index. Groupon, cheap stock, Retook the 50. Snap. Here's one I've been in for quite some time, which is Weibo, and I tightened up on this one. I sold my calls that had a lot of money in them and bought some at the money. In fact, in Weibo, you'll see a very familiar trade. Price is 130. I have a 130 call and a 130 put. For the 130 call, I paid $680. No, I paid $714. For the 130 put, hold on a second. That's an order I got sitting out there. For the 130 put, I got paid $10. And then I bought a 210 put, which I had to pay for. So I got $4, made $4 on the put spread, or got paid $4 on the put spread, and that paid for $4 worth of my calls. So I got $4 in the trade, plus I risked losing that, plus 10 more if Weibo goes down. But it allowed me to sell the position I had to help pay for what I bought. All right. And I like Weibo here still, as well as YY, although it's getting expensive. Apparel footwear, it's hard to believe how strong some of these stocks have become. Here's something that might be buyable. Nike sideways breakout on Friday, pocket pivot and a kahuna. Hanesbrand, couple pocket pivots, a kahuna, and a Mobo breakout on Friday. Don't like the earnings on either of those. Ralph Lauren, nice run here. These stocks are on fire. Can you imagine Skechers is a leader? Had a Bible gap up here, pulled back, never violated the bottom of the day, and a nice run. And Deckers still to get above here. Has a nice move here as well. We have a position in that one. Banks, regionals might be outperforming here. And there's a lot that I liked. Look at the leaders here. Beautiful stock. You want to get into it back here if you could have when that bongo turned green, or perhaps back here where you have pocket pivots. Kahuna is a Bible gap up. Big run here on Citizens Financial. First Republic is not as good. Regions looks great as well. Or I've been telling you for a long time just to buy KRE. Is that the regional banks? I can't remember anymore. Time for me to go to sleep. Similar pattern. This is a ETF. And then going down the list, number 10 was specialty apparel. And there's been some really good stocks here. So let's just go through these real quickly. I own a couple of them. TJ Maxx looks like it's trying to go higher. It actually has earnings per share growth for a change. Foot Locker just broke above the 200. 3 kahunas in 5 days. Ian told me to pay attention to that. So Foot Locker looks interesting. L Brands, which has been dead for a long time, looks like it's bottoming there. A couple of my favorites, Ross Stores and Burlington, are leaders. Here's Gap breaking out, also a leader here. Here's Burlington, it's been such a strong stock. DSW breaking out above the 50, green. Mobile breakout out of a squeeze, pocket pivot and kahuna. That's where a lot of my big runners have come from. ANF breaking out to new recent highs. I have a position in that one. I actually sold, just to lighten up on retail, I sold my American Eagle Outfitters. I may want to get back into it if it breaks above that PSAR dot. So those are the top 10 groups. Casinos have been red hot. I like Wynn, which is one that I'm in. And I'm going to do some research on El Dorado Resorts here. Love the pattern, a kahuna, a mobile breakout from a squeeze. in a stock that's been in an uptrend. That is a Jeffrey stock if it takes out the PSAR dot. Great earnings per share growth coming in. So what I have done is I started my weekend by going to my Internet Web Explorer and I downloaded some of the groups that I like. These are some of the groups. Some of them are IBD groups, some are from MarketSmith, some are from other sources. I then combine them with my favorite HGSI scans that I brought down from the smart groups, the custom group of the GIF stocks, the top stocks in the market. I then come up with a list that I put price and volume, and I get 705 stocks. I went through those 705 stocks manually, saw a lot of extended stocks, and I ended up with a buy watch list, which is this one right here. Not everything, some of these things have a story. Let's just take a quick look. We already looked at some of these. NVIDIA, I like it. Love the stock. Great up pattern. I think it runs again. Electro Scientific Industries, don't know anything about this. We looked at it. I like the earnings per share growth. That's why I added it to my list. Caterpillar, Deere have been great runs. Maybe they're marijuana stocks because of the increased need for fertilizer and farming. Who knows? But it continues on a good run. Chemet, I like this as a buy point coming off of a base that it's been in for about 3 months. Netflix, we already talked about. Raw Stores, we talked about. Weight Watchers, big base. And then what happened here? Mobile breakout from a squeeze and a kahuna, and then the bongo turns green. Look at the earnings per share growth. Oprah is a superstar. She's a big part of this company, and it looks like it wants to go higher. Restoration Hardware, basing here on the 50 with a kahuna. That's where I like to buy things. Great earnings per share coming in. IKVIA Holdings, ditto, pocket pivot, kahuna in a squeeze on the 50. Radius Health we looked at. Supernus we looked at. Chemours is a specialty chemical company. It's been pulled back, broke above the 50 here. Bunch of kahunas, looks like it wants to go higher. Here's a utility, but you got to love the flat line, the breakout, the kahunas, the pocket pivot pays no dividend. That I don't love. XPO Logistics, something that's been the discussion of a number of potential buyouts for help with the logistics. And then Corcept, and this one I missed going back into after it pulled back, but a breakout here in late December and a nice run with great earnings per share growth that's been coming into the stock. Cisco, the food preparer, high base, looks like it wants to break out. Vertex, this one's interesting. We talked about it back here, and it's had a nice move up about 10 points. It's sitting right below the PSAR dot and getting ready to run again. WAPCO is another one that broke out, probably too late on this one. But Brooks Automation just breaking above its moving averages looked interesting. Louisiana Pacific, they make wood building material in a sideways congestion. We've been looking for some momentum coming in. That's a breakout, waiting for a signal. Herbalife, another stock that's been basing for some time that looks like it wants to break above. SRC Energy, God, there's a lot of stocks here. AMN Healthcare Services with this beautiful base here and a breakout with a kahuna, mobile breakout from a squeeze. Another specialty chemical, basing, breaking out from a squeeze. National Beverage, basing in a squeeze with a couple of breakout signals. Here's that ERI in a squeeze with breakouts. Diodes, pullback, but broke out above the 50. Mobile breakout from a squeeze, pocket pivots and kahunas. Another great pattern, great earnings per share growth. Not great volume. Five Below, another potential retail play I'm looking at. Green Dot, a consumer finance. I just like the pattern. Uptrend, sideways, PSAR right below, mobile breakout from a squeeze and a kahuna. A break above that PSAR dot would be very bullish. Columbus, Mackinnon, this is one that broke out already. Hasn't run much. I don't know anything about Appfolio. It's expensive stock with a huge PE despite its earnings. But do I not love a pullback sitting on the 50 with 2 kahunas in 3 days coming out of a squeeze? And that's why I chose that one. And Upland Software, another uptrend, sideways, breaking out here, mobile breakout from a squeeze and a kahuna. Malibu Boats, apropos, concern that's where I spend some money, my profits. Pullback, sitting on the 50, pocket pivots and kahunas. Norboard, another wood material like Louisiana Pacific, sideways consolidation, breaking out. I think you can see what I like to trade. Too little volume here, too little volume here. And then here's what I like to see. I like to see a stock that I've been into up here with kahunas, mobile breakouts, pocket pivots actually work with a nice run from 22 up to 30. Exelixis has been a disappointment over the past week because they had great news come out and probably will get a label extension. But right now I'm just watching it to see when it breaks out. Those are some of the ones that interested me. And just to give you a sense on that new index I created, I didn't bring it over here yet, so let me stop this for a second. Okay, I've got the melt-up leaders out now. Let's just look at them very quickly. Let's rank them by force. What the heck? And you'll see why I call them leaders. A little different than stocks I'm willing to buy. Home Depot, is it a good buy? Sure. At some point it's too expensive and too extended. Look at the high jump. What a great move from middle of November on. That's what I'm looking for. Kohl's. What a great move from the middle of November on. Alphabet, been in a great move forever. Marriott Inc., oh my God, since September, what a great move. Can you be more tight than this? Weight Watchers, big move starting in January after being in a base. Deere & Company, big move up here since October. United Rentals, for months. XPO Logistics, been up for months. Corcept, this one is a leader now, and it's extended, but it just got there. T. Rowe Price, we looked at Skechers, we looked at YY. Tractor Supply didn't make the final cut because I had 3 in the group. NVR, this is a expensive builder. My God, what a tight chart that one is. Paycom. And then probably the pattern of the week which I was in was Anaptys Bio, ANAB, $30 stock to $120 in the matter of 3 months. Wow. But those are some of the stocks that made my melt-up list. The CBOE group, lower left, upper right. ODFL, upper left, upper right. SVB Financial, Broken Record. Ollie's, Southern Peru Copper, Boyd Gaming, Gardner Denver, Fanhua, Piper Jaffray, Sun Hydraulics. Let's take that out. Let's pull out Priceline. Let's put in Children's Place. Yes. Mid-November to now, major run. Old Dominion, Children's Place, SVP Financials, Ollie's, Southern Peru Copper, Boyd Gaming, GDI, that Fanhua, There are just a lot of great stocks out there and a lot of great patterns. We saw Piper Jaffray and we saw Sun Hydraulics. So, in summary, this market has been a wow. It's been amazing. I've had returns I've never seen in such a short period of time. I also recognize it's getting extended. As I said several times, markets have a tendency of going much longer than you think they would. I think we'll have volatility in the next day or so because of the spending by the government, which I expect to be resolved very quickly. I think this market goes higher, but we're in need of a pause. And when I can't find a lot of stocks that are good setups because they've all taken off already, I don't want to be the last one buying when everybody else is selling. So be judicious and prudent in your purchases. Look at your stops. Adjust them accordingly for the current markets. Get through any pullback. Get cash in the bank because you're going to have a mother of all buying opportunities, I think, before we get to the middle of this year. On that note, I say thank you for participating. I'll probably do a live one of these for people that have attended my meetings in the past in the next 2 weeks. Thanks again. Sorry again for last week's audio. Have a great Sunday, and let's knock 'em dead this week. Thank you.